Let's focus earnings then, and Team Lease came out with its numbers where the operational performance was steady. Profits grew about 23%. Let's talk about the segmental growth as well as outlook for the company. Ravi Vishwanath is the CFO joining in to tell us just that. Good to have you on board. It's a healthy set of numbers on a year-on-year basis, but QoQ it's been a bit soft. So what led to that sequential 12% decline in your HR services while general staffing and specialized staffing as well has been tempered?
Thanks. We've always said that Q4 would be a slightly slower quarter in most of our businesses, and this time has not been any different. There is always a certain cyclicality that we have seen in the staffing business. Whether it is general staffing or specialized staffing like IT or telecom, the Q4 has always been one where growth is a little muted for us. Having said that, HR services for us, this again has a lot to do. A large part of the HR services is our training under the government schemes. And quite a few of them went a little slow in view of the elections and so on. So that probably explains a little bit of a slowdown in the HR services as well. But overall, I think we have been on track to what we said we would deliver consistently over the past many years. We started, when we went IPO 3 years ago, we were at a 0.9% PAT. We are currently at about 2.2% for the year. And we will kind of growth over the next few years as well.
All right, fair enough. What about trends for temporary staffing? The reading at the current juncture, what is it, and which pockets do you think will remain a little bit of a drag, and which do you think will offset it?
The current trends for temporary staffing are pretty good. There's a fairly large, if the open positions that we have currently that need to be filled is any indication, it looks fairly strong at this point of time, stronger than what it was at the same time last year. Across the board, we have been seeing growth across the board. The areas where the growth has been positive is in the BFSI space, is in the fintech space. And these are some of the areas where the growth has been really good. We hope that some of the other areas like FMCG, retail, etc., will start picking up from now onwards, which is a season for all of those to start kicking in. We do believe that there are I don't think there are any particular area that you could single out as something that could drag the business down, because overall, I think it's kind of fairly stable and kind of growing.
Okay. Your EBITDA margin has been ticking up gradually and would have been higher had it not been for the sequential decline in some services, particularly HR, I guess. What kind of improvement are you aiming for the next 12 to 15 months, based on the mix, based on the pricing, as well as the growth levers?
We do not give any guidance as far as numbers for the next 1 year, but then we have actually indicated that over a longer term, our target is to get to a 3.5% margin. We currently, like I said, the journey began at the IPO when we were at 0.9%. We have got the business, we have got the company to a 2.2% over the last 3 years. And we would like the company to get to 3.5%, which is which is our goal for the next 4 to 5 years. We should be able to take the company to the 3.5% actually.
Okay.
So you could probably do the math, saying for the next 12 to 15 months in terms of where we would be.
Done already. Thanks for that. But we're also expecting the government's continued thrust on job creation and, talking about some labor reforms perhaps. Are you expecting something bold to come on this front?
Yes. Absolutely. The labor reforms is long pending. This should have been done about 2.5 years ago. I think a large part of the work is already being done, which is the 4 labor code, which is the implementation of the 4 labor codes. I think that should be on the government's priority right now in terms of getting the labor codes out. Job creation, I think the government has heard it loud and clear from everybody that this is an area that needs immediate attention. I think coupled with the labor reforms, this area would get a lot of priority from the government in the first 100 days itself.
Okay. Now, let's talk about the inorganic growth opportunities that you're looking at. What are you considering right now?
There are a bunch of things we are considering right now, in the sense that we always said we've always said that we are looking at opportunities constantly, things which will either get us scale or reach in a particular geography where we don't have a presence, or capabilities that we don't have internally, or segments that we don't cater to. So we are constantly looking out for opportunities. There are a bunch of them which are at fairly advanced stages of negotiations, and not every deal would probably get signed off, but but if things go well, we should probably have a few more this year, actually.
Okay. And compared to the 23% consolidated revenue growth in FY19, should we expect a 20% plus growth in FY20 to continue?
Oh yes, absolutely. That's something that we've always been saying. Given the market opportunity and given the kind of leadership position that we enjoy, I think it would be reasonable on investors' part to expect a 20 to 25% growth in our top line year after year.
Okay, good to have you on the show. Thanks much for taking the time out and highlighting what the quarterly outlook is, and
Thank
of
you.
course